The average cycle for Bitcoin on the downside during winters is at least 12 months. We're not even there if you look at the November highs. Some people look at from the April highs, but I'm going with more the highest point there for the cycle. So I think you have to have one more flush.
In today's interview, we have crypto millionaire investor Gareth Soloway. He gives us his thoughts on the future of Bitcoin and why he thinks you'll regret not buying Bitcoin right now while it's low. Let's listen.
I also think, again, this is so representative of like the .com 2.0, right? You know, if you look at the chart, I mean, here I can show my charts here real quick. But one of the things that I'm a big fan of is that 2017 high, at least for a near-term bounce. And if we jump over to the monthly, you can clearly see, I mean, yeah, we pierced the line here, but that thing's holding. I mean, that is absolutely holding. So I got upside targets for me in the near term is that 25,000 level. So if I put a line, actually, you know, let's take a step back here. So number one, the high today, notice the high of this candle here and the high right here. So that is your near-term resistance, right? 21,800. I do think it gets through there. I think this is just a minor resistance point. And then my target again remains 25,500 with potential to maybe get to about 28 and change thousand. So this is minor, this is major, this is major. I would be somewhat doubtful that we'll be able to get through 28 and change. I think this is a ton of resistance. I still think there's unfortunately one more big move down that's going to surprise a lot of people. But the market is finicky in that it has to make people start to believe in the bull case again before it can kind of rip it the other way. So we still have to get that little bit more of a move up, get some people thinking the lows are in, and then you'll see it kind of come back down again. I still have this, and I'm just going to erase these lines real quick to keep it as clean for you guys as possible. But basically what you have is what I call a measured move calculation, which is taking that 69,000 high. We basically had a nonstop drop here. Then you had 3 months of almost perfect sideways parallel consolidation. And what you do is you take this distance and you map it out to this distance, and you end up getting basically 12,000. Also, 12,000 happens to be about an 80 to 85% drop from 69, which is the standard correction or bear market, bear winter Bitcoin has. And then also, lastly, you know, you have this level right here where there's a major support in here. So again, that's kind of what my next target downside will be. It may not happen. I'll tell you guys this is that I can, from personal experience of 20 years of trading, I can tell you that many times when I was saying, oh, this is going to be where it goes, it never went there. So in this situation, I picked up some of the hodl position at 19,000, and I'm going to add a little bit every like 2,000 or 3,000 lower. So now that it's below 20, or when it was below 20, it's kind of the beginnings of me dipping the toe in the water. And then essentially what I'll do is every 2 to 3 down, I'll just add a little bit more until I accumulate what I want. Basically, Polygon had this beautiful little cup and then handle pattern, and then notice this trend line. And again, you know, part of it is, it's not that I don't think Polygon can go higher, but when you have a bunch of different positions, as you get in the money on them, you take just some off the table, put those in your pocket, because not only is it smart money management, but also it puts you in a position where if all of a sudden, let's say the crypto market does something I don't understand tomorrow or don't expect, at least I cushion myself with those profits. So I took some on Matic and one other one as well. But just going to what you were saying is basically, you know, I'm in a position where I think that Bitcoin, after this pump up, that'll have its final flush. No, I think it's each trader and each investor's own personal, you know, risk tolerance. You know, some people will, you know, kind of protect themselves way more than others, right? And again, you just have to be aware of what you're doing and the risks that you're taking on. So like for me, I'm, believe it or not, most of my money's actually in stocks, or either long or short stocks and so forth, mainly because stocks, especially stocks like Apple and Microsoft, they're not as volatile as crypto, right? So I basically segment my swing trade money or investment money in different segments. Some goes to gold and silver. I've bought physical gold and silver because that's kind of like my insurance policy. If I wake up tomorrow and like the banks are closed and everything's, you know, and I can't get Bitcoin off, you know, all those type of things, I like to have a little physical on hand. But aside from that, like gold and silver, you could argue real estate, but I think real estate's in a bubble, so I think that's a little risky right now. And then some stocks, I think you have to look at certain stocks, and then you have your crypto. And so I don't really do a lot of like, there's option strategies you can employ for protecting me, but since most of my stuff is swing trading, I'm not a huge long-term investor, I don't protect myself much aside from having different asset classes. Again, charts to me are the number one thing. I do follow the macro because it's important to kind of formulate how the market. So I use the macro as more of a forecaster. So as soon as I see like the Fed has been raising rates and then Bitcoin's getting crushed, I'm trying to look 3 steps ahead, right? So before the market reacts, what's going to happen, or what are the signs when the Fed has to start backing up? So I've been talking about how it's very likely that the Fed will push us into a recession, which will then bring inflation down. We've already seen oil down 20+%. We're seeing commodities get crushed lately, like copper's down massively. Well, that's going to bring down inflation, which if we go into recession is going to open the door for the Fed like later this year or next year to maybe even lower rates. And so it's kind of using it where the average person is going to say, oh, the Fed's raising rates right now, but you have to, as a trader, think 3 steps ahead and position yourself for that. So I think that's kind of the key. I think it's going to be ultimately good for Bitcoin. I think Bitcoin will have an inflection point where at some point, it goes down with the stock market goes down, and then there's going to be some inflection point at some price where if the Fed, so if we get into a depression type scenario, then chances are we have maybe even deflation or at least lower inflation. So right now we have inflation up here and unemployment down here. As we slide into recession, people spend less. It's going to bring down inflation, but unemployment's going to rise. So basically, the more people employed and the tighter the labor market, the more businesses have to pay their employees. The more money you have, the more people will bid up asset prices. So let's just say you have 10 people and there's a TV, right? So people say, well, 10 people want that TV. Let's raise the price, right? Plus you're getting scarcer resources. So you have more resource, like oil going up, more people are driving. So it's all coordinated. But then the higher inflation gets, the more it puts pressure on people because now it's outpacing what they're making, and then it causes a recession. So it's this back and forth weird thing where it's just like a ping pong ball or a pinball machine.
Subscribe to keep learning the truth.